You can't have a business that says pay 500 rupees and give you 250 rupees as a cashback. And that's what exactly happened with Paytm business. Its share price is 70% approximately down from its initial public offering. If you remember, we have published a video during Paytm IPO launched. Those who have watched our video and subscribed to our YouTube channel might have gone through the video and have taken informed decisions during that time. If you have not yet subscribed to our Nayakfin YouTube channel, do that and get unbiased information about investments and financial products. Now let's talk about Paytm today, why it has fallen down 70% from its initial public offer and what you as an investor, if you have invested in it, need to do with that. Paytm is struggling to convince its customers about its value of the business as of today. Now, way back in 2016, when the Indian government declared demonetizations, you have remembered that Paytm has come up with an aggressive marketing plan and has acquired quite a number of customers via its mobile applications where people find it easier to do transact that time. And during that time till January 2021, Paytm has got 19,000 crore of investment from various VC investors. Now what has happened during that time also is that it has accumulated loss of 13,000 crore in last 4 to 5 years. Now why this thing has happened? If you see the Paytm cost structure, majority of expenses goes towards meeting up the payment processor payment like that of giving to the Visa, Masters, diners and etc. etc. Plus they have a huge marketing and cashback and promotional drive to acquire more and more new customers. Added to that, they have a huge employee cost also, and because of the higher ESOPs that they have given in run up to the IPOs that have also added up to the cost. So Paytm today has a huge cost which has been incurring in its balance sheet over the years. Now if you look at the revenue stream of Paytm, most of the Paytm gross merchandise value comes from payment processing, and in 2019 GOIA has mentioned that the UPI payment was made totally free, and Paytm majority transactions right now is coming from the UPI. Even the incremental business volume which Paytm is doing right now is forming the UPI businesses. So Paytm revenue, although it is volume is increasing but its revenue is not increasing because UPI is totally free. Apart from that, Paytm other income lies in distribution of financial products and merchant services, but that they are having aggressive competitions coming up from Google Pay and Bharat Pay and Phone Pay itself. So they're having a challenge in the revenue itself. To mitigate this thing, what Paytm was thinking initially that they will soon be able to get a banking license, but because of certain things which has happened, they will not be able to get the banking license as easily as they think initially it was. A couple of reasons. Number one, the Paytm, if you see the shareholder pattern, there are 25% plus investors are from China. So that's one of the reasons why RBI will not be able to give his banking license. Secondly, earlier RBI has banned Paytm to get new customers on board because of defaulted on KYC. There are news coming up from data leakage to the Chinese firm. So all this thing coupled up, it is quite unlikely that Paytm will get a banking license soon. Banking license would have been a mitigate factor for Paytm because there they can utilize the balance sheet in their lending business and get some revenue out of it. Added to that, there are a couple of news coming up of Paytm owner getting arrested because of some other issues and later on get bailed. And there's another interesting factor is that, during the IPO launch, Paytm has raised 18,000 crore from the market. 50% of that money gone to the existing VC investors who are actually sell off their stake during that time. So which actually gives a very negative impression to the market. So if you see the Paytm balance sheet, they have a negative cash flow as I already mentioned to you. They have a negative ROC, return on capital employed. So holistically, if you see the Paytm revenue, as I already mentioned, they are on a stress. Paytm has a huge cost to incur and they need to incur those costs because they have a higher stiff competition coming up from Google Pay and Phone Pay and other services. Coupled with that, they are unlikely to get a banking license, what I have said earlier. If Paytm not able to raise its revenue, it will be very difficult for them to come up with the share prices, the level that we have initially launched during the IPO. Pressure on revenue, shady outlook, and increasing cost. This is the reason why Paytm prices has fallen down from the top and to the near about 70% level at right now. What's going ahead in Paytm? Well, its ability to raise more revenue, its ability to get more business, top line as well as the bottom line, will able to define where its share price will happen. Once your stock got listed, you cannot work like a startup aggressive company seeking funds from here and there, and you need to give return on the capital which is employed out here. So watch out for that thing. On that note, we'll say that we are not very positive about Paytm numbers. Do subscribe to Nayakfin Investor Services YouTube channel. We'll get you a lot of updates about different stocks, investments, and market informations to make unbiased and informed decisions. Thank you very much.